Hello and welcome back. It's been a little while since we've posted a video on YouTube. We've been quite busy focusing on the community, creating some new content within our course. If you follow us on Instagram, you'd notice that we've released a refinement to our course called the LSM, and that's what we've been most focused on for the time being. Hence why we've been a little bit quiet on YouTube. So in today's video, what we're going to be covering is setting targets for your trades and how to manage your expectations when setting your targets. So to start with, we're going to have a look at trades on the lower time frame. So at the moment, we're currently on the 1 minute time frame. Now, I know there's a lot of people within the SMC community that would like to or spend a lot of their time on the lower time frames, be it the 1 minute, 2 minute, 5 minute, whatever. So we'll use the 1 minute as an example to start with. So let's have a look. We've got this area of interest just here. Right, we've got this zone. All right. Now, before anyone points out the obvious, yes, this is hindsight. We're using the replay tool, hence why this makes it a lot easier for us to show examples. In this example, we're going to be looking to take a trade short from here. It's only going to be a short-term trade. Now, what we're going to be thinking about is if we're going to be looking to take a trade from this supply zone, we want to be thinking, right, where is our target going to be? And what would be a realistic target? All right. Now, if we was to zoom out, okay, we've got lows here, we've got these lows, we've got this low here, we've got some, maybe demand zones here or demand zone here, which is, partially been mitigated by this area here. So when you're looking to take your trade, you also need to start planning your exit as well. Now, because we're looking at a 1 minute time frame entry, with this instance, we don't have a higher time frame backing because essentially we want to be in and out of the market relatively quickly. So when we start to zoom out, we can start looking at lows around here. All right, some of the demand zones, and what we want to make sure is that we're actually setting our expectations realistically. All right. So to start with, what I would prefer to be looking at is somewhere around here. So we've got this demand zone just here as a potential target. Now, when we're trading off the 1 minute, we don't want to be expecting to hold trades that are going to run to 50, 100R, anything crazy like that, all that sort of stuff that you see on Instagram. If we're taking a trade solely off the 1 minute, we need to be realistic with our expectations. Now, we will look to take a trade directly off of here. We'll have our stop loss just above this high here. All right, so we've got a stop loss of roughly 2 pips. Okay, now if we was to set our target for about here, if we have our target just shy of this zone, if this zone does get mitigated, it gives us a little bit of breathing space for our trade to actually be closed and this area to still be mitigated. If we had our take profits somewhere either within inside there or just below at the bottom part, we may get a partial mitigation, not quite hit TP, and price just push straight back up, take us out of break even. So I'm going to look to take profit just shy of this zone, and as you can see, if we advance price forward, price comes up, taps us in. Let's have a closer look at this. As you can see, it just about tapped us in there, so we've price is pushed in by about 0.2 pip. Now, if you've got a low spread account, then there's a very good chance you would have been tapped into this one. If you don't have a raw spread account, then there's a chance that you either might need to take a market execution, or you may not have been tapped into this particular point. All right, as you can see, price is now pushing further down. Then it's just smashed through our TP. Now, this target, in this instance, we would have been targeting, we would have taken full closure of the trade as it's only a lower time frame trade. If it was a higher time frame trade, we could take partials and start targeting higher time frame structure further on. All right, but in this example, we are only going to be looking to take full closure of the trade when it hits our targets. Now, if you think about it, this here is a 3.9R trade. Okay, it doesn't look as big and fancy as most Instagram traders would have you believe. However, if you think about it, if you have a 100k account with FTMO My Forex funds, 3.9% gain. If you're risking 1%, that's 3.9% gain. All right, that's $3,900. Think about it. That's still a decent payday if you was to take a quick trade like this, take full volume, close full volume around here. 3.9% gain is still a great payday. Even if you risked 0.5%, still almost 2% profit. That you would have banked on this trade. 2% profit on a 100k account, again, that's 2k. Instead of chasing these big R trades, if you are trading on the 1 minute time frame most of the time, this is a very realistic target. As you can see, price does actually push a bit further down. Well, if you was trying to squeeze more R out of this, if you wanted to target towards this low down here, just shy of this swing low, the trade could have peaked around about 6R. All right, but before it reaches that 6R target, you still run the risk of price coming back, maybe taking you out of break even before then pushing further down to that original target. So if you have a realistic target that's relatively close to your entry, near a demand zone or even a swing low or swing high, something like that. In this case, we would have picked this demand zone. We've quite easily banked 3.9% or 3.9R. So here's another example I want to show you. So we're going to have a look at this supply zone just here. Okay, so we've got a supply zone here. How you look at liquidity and inducement, you can see we've got some liquidity here. All right, we've got a little bit of imbalance just around this point here. So we've got some kind of reasoning for price to come back into this area. Now, so this is another trade we're going to start looking at entering in. All right, so with this trade, we can look to take an entry around here and maybe have about a 3.5 pip stop loss, give us a little bit of a buffer around the back of the supply zone. All right, and now let's think of a realistic target that we can look for. All right, so we have this swing low here. We have an unmitigated demand zone. Okay, so we can look at this zone just here, and we can treat this as our target. All right, now we're going to have the target just shy of there. So that if this zone does get mitigated, there's a very good chance that our take profit will actually activate. So 3.5 pip stop loss, and let's advance price forwards. You see price is tapped in there. So we would have been tagged into the trade at this point. Okay, keep advancing price forwards. As you can see, we've then smashed through our TP, we've then mitigated this zone. Okay, now here's something else that might start causing a bit of FOMO for some traders. Okay, again, what we're focusing on at the moment is just 1 minute structure. For 1 minute structure, we can't expect to be targeting, daily lows, 4-hour structure, stuff like that, if we are only entering on something like this on the 1 minute. All right. So once you've had your TP hit, okay, 2.8, almost 2.9R. All right, if you're risking 1%, that's still a very nice payday. That's again on a 100K account, you're making almost or pretty much a month's wage for the average person. So have realistic expectations. So that for most people, no matter where you are in the world, that's still going to be a very nice payday for you if you were to take just 2.8% here. So just moving on to what can then start causing a lot of FOMO for some traders is thinking, well, I'm not going to target here. I'm going to start looking at maybe something like this. Now, this swing low, if you was taking a trade on higher time frame structure, it would be a bit more of a reasonable target, providing you had an optimal entry on the higher time frames. All right. But here, if we start advancing price forwards, okay, we can still see that price is still pushing down through here. And a lot of people start thinking, oh, I should have held on to the trade, which is all fine in hindsight. But if you start telling yourself, oh, I wish I held the trade longer, you still run the risk of price coming to our original TP, pushing back up, taking you out of break even, or potentially even hitting stop loss and then coming down to somewhere like this. So this is why if you're trading off 1 minute structure, it's a lot more reasonable to be setting a target somewhere around here, taking that 2.8% and then waiting for the next trade setup. So let's have a little look at higher time frame structure. Okay, so we're currently on the 4-hour time frame. Now we've had a mitigation of this zone over here. All right. Now within here, there would have been an entry. If you was to be trading our LSM method, there would have been an entry pretty much right at the top of this peak here. We won't cover in depth how the entry is because that would take quite a long time to explain in the video if you've not been through our course content. But there is a trade entry around about here. What we can do is we can have a closer look around here. We can set our risk reward tool. Within here, we can start to get an idea on how we can set our targets for this trade. Okay, so with this trade, we would have been entering, once we've had our confluences stacked, okay, we do use an RSI, we do use a separate confluence that is within inside this zone near the origin. Once we have all those requirements met, we would have been entering somewhere around here on one of these bearish candles. Okay, so we would have had our stop loss just above this zone here, so we could have a roughly a 4 pip stop loss. And what I'm going to do is just going to drag this out wider. Right, so obviously when we're looking at lower time frame structure, we're going to be looking at the price action within that 1 minute. We're going to be looking at our unmitigated supply and demand zones. We're going to be looking at our swing highs and lows as potential targets and trying to establish the most reasonable target for these zones. So this red zone here, this is our 4-hour supply zone. So if we zoom in just a little bit, we've got our entry, we've been in the trade. Okay, now we're going to start looking at potential targets. All right. Now with this particular trade here, all right, we would be looking to take maybe partials off. We'd be looking at taking roughly 80% volume off of the trade. Okay, so we'll be closing roughly 80% around about 13R. So you're probably looking at about almost 12% profit that you'd be able to take from that. Again, 12% compared to 2-3R is a nice payday. Now, once you've closed 80% here, 80% volume closed. Okay, we then have 20% of the trade running, so it's going to be smaller risk. And then what we could then do is start targeting somewhere a bit further down. Now, if we are trading higher time frame structure, this is where it'd be more realistic to start targeting lows around here and potentially lows down here. All right, so we've had this push up and then we've had a pullback here. So this low round here, or even just shy of this low, would be a good place to target. And if you was going to take either a TP around this zone here or even this zone here, either would have worked out. Okay, but this would have been a good place to be taking a TP. This particular low as well, I'll just quickly go into why it would also be a good place to take a low. Is if we have a look here on the daily chart, we've got this wick, which is a daily wick. This has created a low on the daily. Now if this gets swept, we're going to have a good chance that price is going to push further down with some more bearish price action. All right, so this is why we're quite a good target just shy of. All right, so somewhere around here. Now that 20% volume of the trade, okay, hitting 53, nearly 54R. Obviously, it's not going to be 53% because we've only got 20% of the trade volume still running. So after we've got our entry, we could then advance price. We can then see price does push all the way down, like so. We come down. We've got this zone here. We have a few reasons for this to still be mitigated. So we've got obviously it's an unmitigated zone. We've still got imbalance around here, and we've still got imbalance around here as well. So we have some reason for price to come back down to this level. Now, I think a key point to be taken away from this is if you are getting into a trade, certain ways of managing your expectations is if you are trading off a 1 minute zone, trade towards the next 1 minute zone. So if you're taking a short, like we had a look in the previous examples, if you're taking a short from a supply zone, a realistic target would be a 1 minute demand zone. If you're taking a short from a 4-hour supply zone like here, the next realistic target after closing partials is maybe one of these two zones. We had reasoning for price to push back below here when we talk about the imbalance in our mitigated zone. So this would have been a good target. And still, if you're a bit more conservative and wanted to target just shy of this, even that would have been a great target as well. Both of them would have pulled you a significant amount of return. So guys, remember, manage your expectations with your trade. Okay, we've looked at two extremes. We've looked at the low time frames like the 1 minutes. Okay, then we've had a look at the higher time frame, the 4-hour. Again, it works the same if you were trading 15-minute structure, 1-hour structure. So as you can see, if we was taking a trade from this supply zone just here, we've got this candle just there. As you can see, price has pulled up, it's mitigated here. If we was taking a short from there on the 15-minute, the most reasonable target to be trading would be around here. So whether you like closing partials and leaving the rest to run to a further on target or take a closing full volume at a set point, okay, manage your expectations. If we're trading off the 15-minute zone, we're going to target 15-minute structure. Okay, if we're trading off a 1 minute zone, okay, we're going to be targeting 1 minute structure. If we're trading off a 4-hour zone like this, we're going to start targeting 4-hour structure. So guys, hopefully that helped. Let me know in the comment section below if you found this useful. But for now, see you in the next one.